Hi, Assalamualaikum. My name is Zaimah Binti Abdullah.
My name is Noratasya Binti Jamaluddin.
My name is Aliya Kaiyisah
And my name is Tuan Haziq bin Tuan Haziq.
We are from group
BA111-1D.
We are going to talk about accounting system and books of accounts.
Now I'm going to talk about accounting process chart, which is you must know the basic need is source document, books of prime entry and ledger. First, you must analyze each transaction and event from source document. We have sales invoice, supply invoice, good receipt, notes, and so on. Next, you must record relevant transaction and event in a journal. In books of prime entry, we have cash books, petty cash book, sales journal, and main journal. And the last but not least in the process, you must post journal information to ledger account, which is you must record in account receivable ledger, in account payable ledger, stock ledger, general ledger, and so on.
So for source documents are the physical basis upon which business transactions are recorded. Source documents are typically retained for use as evidence when auditors later review a company's financial statements and need to verify that transactions have, in fact, occurred. They usually contain the following information: a description of a business transaction, the date of the transaction, a specific amount of money, an authorizing signature. Many source documents are also stamped to indicate an approval or on which to write down the current date or the accounts to be used to record the underlying transactions.
So for generalizing is the process of recording a business transaction in the accounting records. This activity only applies to the double entry bookkeeping system. The steps involved in generalizing as follows: examine each business transaction to determine the nature of the transaction. After that, determine which accounts will be affected. This calls for the identification of the general ledger accounts that will be altered as a result of the transaction. Second, prepare a journal entry. This involves to just entering the transaction in the accounting system, but also documenting is the sufficiently so that someone reviewing the entries later will understand why it was created. Ideally, the entry should not the impacted accounts, the debit and credit entered, a journal entry number, and a narrative comment. So for the fourth, generalizing can result in entries to the general ledger or to subsidiary ledger. An entry is made to a subsidiary ledger when it involves a high volume transaction that management had decided to summarize separately from the general journal. Double entry bookkeeping is the most common method of general journal accounting. Every business transaction is done by an exchange between two accounts. There are two equal and opposite accounts for all the transactions, namely credit and debits. Hence, when a transaction is recorded in a journal, it's debit one account and credit the others. So for general journal, used to record transaction involve the following. So the first, sale and purchase of non-current asset on credit. Second, withdrawal of good for owner personal use. Third, transfer. Fourth, correction of errors. Fifth, adjustment. And the last one is opening entries. So the format of general journal is provided the chronological order of all non-specialized activity and consists of 4 or 5 columns. So must have date, short description or details, reference number, debit amount and credit amount. So this one, for example, general journal. On April 25, purchase office furniture RM 8,000 on credit from Sally.
Next, we have purchases journal. Purchases journal. It is used to record transactions of goods purchased on credit. For example, May 5th bought goods worth 150 ringgit on credit from Abu. Invoice number 123. May 15 bought goods worth 250 ringgit on credit from Badrul. Invoice number 456. May 25th bought goods worth 350 ringgit on credit from Chong. Invoice number 789. Purchases journal. We have 5 columns. Number 1, date, particulars, invoice number, folio and amount. May 5th, date May 5th, particulars Abu. Invoice number 123, folio PL1, amount 150 ringgit. Date May 15. So next we have sales journal. Sales journal is used to record sales transaction on credit. For example, May 6, sold goods worth 250 ringgit on credit to Johan, invoice number 077. May 16, sold goods worth 350 ringgit on credit to Siti, invoice number 741. May 26, sold goods worth 450 ringgit on credit to Daud, invoice number 246. We have 5 columns for sales journal. Date, particular, invoice number, folio, amount. Date, May 6, particular Johan, invoice number 077, folio SL1, amount 250 ringgit. Date, May 16, particular Siti, invoice number 741, folio SL2, amount 350 ringgit. Date, May 26, particular Daud, invoice number 246, folio SL3. Okay, so for return outwards journal is used to record transactions involving good return to supplier. For example, May 14th, goods worth 50 ringgit returned to Abu, credit note number 002. May 20th, goods worth 20 ringgit returned to Badrul, credit note number 312. Return outwards journal have 5 columns. Date, particulars, credit note number, folio, amount. Date, May 14th, particular Abu, credit note number 002, folio PL1, amount 15 ringgit. Date, May 20th, particular Badrul, credit note number 312, folio PL2, amount 20 ringgit.
So, cash receipt journal. The cash receipt journal manages all cash inflows of a business organisation. In other words, this journal is used to record all cash coming into the business. For recording all cash outflows, another journal known as cash disbursements journal. So this one is the example for cash receipt journal. So on January 5, receipts RM 1,500 for Jason. January 11, received RM 530 ringgit from Siti. January 21, received RM 2,320 from Yasin. For the statement, we must transfer at the journal. State date January 5, 11 and 20. So the details come from Jason, Siti and Yasin. So the amount that 1,500, then 830, also 2,320. Also we must put the amount at the account receivable. So the amount we must total, all total, so we get 4,650 ringgit.
Next, we have written inwards journal. Written inwards journal is used to record transactions involving goods written by a customer. For example, May 10th, goods worth RM35 written by Johan, credit note number 222. May 20th, goods worth RM45 written by Siti, credit note number 211. Written inwards journal consists 5 columns: date, particulars, credit note number, folio, amount. Date May 10th, particular Johan, credit note number 222, folio SL1, amount RM35. Date May 20th, particular Siti, credit note number 211, folio SL2, amount RM45.
Cash payment journal. The cash payment journal is a special journal that is used by a business to manage all cash outflows. In other words, a cash payment journal is used to record any transaction that include a credit to cash. So for the example, cash payment journal is May 18, paid salary RM1,500 to Zaman, nombor 23244. That May 18, check number 23244, details from Zaman, the amount is 1,500. Also discount receivable if have, then account receivable, the amount is 1,500. Purchase and other account if have. Second, May 21, paid salary RM2,300 to Devi, number is 232445. The transaction may to be check number 2325545. Details from Devi, the amount is 2,300. Account receivable 2,300. The last one is May 25, paid salary from Hassan RM3,000. The transfer transaction is number checks 232446. Detail from Hassan, amount is 3,000. Account receipt is 3,000. So that's all. Total is RM 6,008 ringgit.
So this is general ledger. So for general ledger, you have to know that from general you have to insert the detail in here. So this is debit side, this is credit side. So you have to put the detail based on the general. Either it will be in debit or credit. So this is purchases, sale, return hour, return inward. So you can put based on what it needs. This is purchase ledger. Purchase ledger, the function is a ledger for supplier personal account. So based off this, so this is account payable, account Ali. So this is debit side, this is credit side. At May 15, return hour is RM50, and 22 May is bank is 100. The total is 150, and on credit is purchases 150, and the total is same. So next we look at another example. So account payable Raja, do the same thing, but the difference is it has balance D. So this the balance is RM45. See, so we have to take alert about the balance because we have
Sale or account receivable ledger. For this one is a example for this ledger. Zaman account receivable. At debit side, May 9 have sale 4,500. Credit side, May 12 have cash 500. May 20 have return inward 3,000. So the total of the debit side is 4,500. So we must the balance at 30 May balance CD is 1,000. Dewi account receivable and Hassan account receivable is the same thing. Do at the Zaman ledger.
For last topic, I would like to show you about trial balance. first objective of the trial balance, it checks the arithmetical accuracy of the double entry rules used. Second, it helps to detect error within a given time period. Third, it helps to facilitate in the preparation of financial statement. Okay. First, I'm going to show you preparing a trial balance. You must write down the title of the account, and then first you must list each account title and its amount from ledger in the trial balance. If an account has a zero balance, list it with a zero in the normal balance column. This amount it take from this balance CD, balance carried down. Okay. Second, compute the total of debit balance and the total of the credit balance. Verify total debit balance equal total credit balance. The amount should be the same. Okay, which is this. Okay, that's all. So that's all from us. Thanks for watching.
Thank you.
Thank you.